If you're in the market to buy a home, or you've even been thinking about buying a home, you need to watch this entire video. Hi, I'm James Lee, your mortgage professional. Wanted to come to you to address some of probably what you've been hearing on the news and any other outlet that's been giving financial information regarding the new changes that are coming up May 1st. LLPAs, those are loan level pricing adjusters that mortgage companies put on different credit profiles for risk. For instance, the type of property you buy, be it a condo or a manufactured home, a second home versus an investment property or a primary residence, how much money you're actually going to be putting down on a transaction. Those are, I would say, hits or premiums that are added to the actual price of the loan. But what's happening typically, that's based on a credit profile. You know, the better your credit score is, the better your interest rate will be. The lower the credit score is, then you may be going in a different direction. What's happening on May 1st with these changes is they're kind of making the difference between the two a little bit smaller. So those that are in a better position with higher credit and a larger down payment will still be in a pretty good position, but those that have a lower credit and a lower down payment, they are actually going to be in a better position than they've been in the past. They're actually reducing the cost for those that are a greater risk and charging more to those that are lower risk to subsidize those that have that higher risk. Now, the unfair thing about that, which many of you are probably asking, is, well, what about me? I've been responsible. I've paid my bills on time. I've, saved a little bit of money. Maybe I don't have 20%, but I've saved some money. What that could do to you by increasing the price for you is it can make your ratios higher. So you could actually qualify for less. It can make it a little bit tougher for you to actually get into a home. So this is essentially, they haven't coined it this, a Robin Hood deal. If many of you know the story of Robin Hood, this is essentially kind of something like that. And I know that it comes from a space of wanting to help and great intentions, but it's a tax on those that have done a good job with taking care of their credit and budgeting and taking care of whatever it is that they need to do. But it's hurting them. It's hurting them. It's still a better deal than if you hadn't done it, or if you continue to rent, but not as good of a deal if you had just gotten into this thing and got your deal closed and bought your home. That's why many times you saw me say, what are you waiting for? Don't wait. There's changes coming. So it's across the board for everyone. This is not one of those things that one company's doing it and another company isn't. This is a change for the investors, Freddie Mac and Fannie Mae. It's going to be across the board. So you might entertain looking at, FHA as an option. I know that's not been the best for many times, but we'll probably see a pickup in the FHA production. So for all of those people that were looking at conventional being only option for you, you may look at FHA as being an option, at least just to start, especially if you have 10% or more, because there is an option at the 10% level or 90% LTV where you can eliminate the required mortgage insurance in the future. So you didn't do anything wrong. Those of you with good credit, that's budgeted, that's saved. You did nothing wrong. This is something that you need to contact your congressman about, because they think it's a good idea. And of course, they're not in the field. They're not here buying a home, and they don't understand it because it's not affecting them. They just make those rules and those laws and they pass it on down the line. So I wanted to at least put it out there so someone could see this and kind of understand it. Hopefully it breaks it down to you, at least for a little bit. If you have any other questions, please feel free to reach out to me, theleegrouploans.com. or any my information down below. You can reach out and we can discuss it. Till next time, I'm James Lee, mortgage professional. Take care.